You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday, time to talk some futures. Once again, it is time for the Futures Rundown. My name, of course, Mark Longo from the optionsinsider.com, as well as on the network upon which all of you folks were binging last year, continue to do so this year. Of course, we thank all of you who listen, download, stream, subscribe. Make sure you're listening to the full network wherever you get your favorite podcast. Otherwise, you're missing out on a lot of fun, including if you're not hanging out on the Pro, theoptionsinsider.com/pro, then you are missing out on the upcoming Vol Deathmatch 2.0. 2 men will enter, only 1 will leave. Should be a good time. Check it out over there on the Pro as we check out who's joining us for the first time on this show in the new year. Our old pal, Mr. Rich Excell, the director of the Derivatives and Trading Academy over there at U of I, a.k.a. the Hogwarts for derivatives traders. Mr. Rich, welcome back to the Futures Rundown, and Happy New Year to you, sir.
Mark, Happy New Year to you. Good to be here. We're already off. I mean, heck, we're not even full 2 weeks into it, and we're already off to a really exciting start to 2026 across all different futures markets. I think it's going to be a good year for you and your listeners. I think there's going to be a lot of cool opportunities.
Well, one of those things is volatility, vol posing, I should say, some opportunities here at the start of the show. But Mr. Rich, you had an opportunity to do some vol prognosticating on the network last year, and I have to say, sir, you knocked it out of the park. You were one of our 2 winners on the network of our Vol Crystal Ball contest. You and, ironically, the guy who preceded you on the show last week, Dan Gramza, number 1 and number 2. We didn't plan it that way, listeners. I promise you. It just worked out that way. That both of you, the only 2 guests on the network who got within our 10th of a point margin of victory in our Crystal Ball contest. VIX Cash went out at 14.95. I believe you were at 14.92. And Dan was at a 15 even. So both of you knocking the cover off the ball. Again, this is 1 year out, listeners. So a 1 year out prognostication of VIX. We also had 2 listeners win. So 4 winners this year. 4 new entrants into the Hall of Fame. So your red VIX jacket, Rich, will be coming soon for your entrance into the VIX Hall of Fame. Our producers will reach out to you for your jacket size, sir. Congrats to you. Any thoughts you want to share to the folks?
No, that's awesome. That's I didn't realize it. That's fun to hear. A blind squirrel finds a nut, as they say once in a while, right? But I think the VIX is a cool one. It goes through regimes, right? Left and sometimes we're in those low vol regimes, and when sometimes we're in those high vol regimes. And last year we kind of had a little bit of everything. And looking at it, to have it end up, having it end up relatively constant for the year, even though we were all over the shop, is pretty crazy. And but not unlike what you see a lot of times in the VIX. And so it can be a pretty good, fun tactical trade, but it's certainly one you want to understand the mean reversion category.
Yes, you joined Steve Sosnick. He was the only guest on our network last year who made the correct prognostication. So now 3 of you in the Crystal Ball Hall of Fame, along with some listeners as well. So good stuff out there. Congrats to all of you. By the way, our new contest for this year, Rich, just went live at the start of this week. So I'll give you the rest of the show to mull. Then I will ask for your prognostication. See if you can do 2 for 2. So far, a feat that no one has managed to do. So you will stand alone, Rich, if you could do it twice. So once is impressive enough. Twice, that would be wild. You know what else is wild, listeners? It's the trading pits. So let's dive in.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to the Trading Pit, the portion of the show where we break down what's lighting up the futures markets this week. And before we do that, Mr. Rich, we just talked about 2025 and VIX, so let's kick things off. This is your first appearance on the show this year. This is the second full trading week of the new year, so let's kick things off. It obviously was a wild year last year in the futures markets. When you look back at 2025 through the lens of futures, sir, what really stands out and resonates to you?
Yeah, there's probably a few things that stand out. I think the one that really jumps out that people aren't used to looking at on a year-to-year basis, if you will, are the precious metals, gold and silver. Gold, which carried through after a strong 2024. Whether it's the debasement trade, likely more central banks accumulating, whatever it was, gold continued its strength, and silver caught up in with abandon towards the end of the year, and it continues. And so that precious metals move has really something that I think is something we all want to pay attention to, because in the commodities, metal, in the markets, the metals markets in particular, gold is known to lead by about 12 months versus other commodities. And so the fact that gold has been strong for more than a year is why you're seeing silver, and you're starting to see the other metals, et cetera, and you'll see other commodities flow through. Looking at commodity cycles, it does look like we're at the start of that. And I think you have to really start there. In the face of that, I was really kind of surprised at, how well bonds did. I think when we go back to, hard to remember, back last January, the bond market was a little worried about all the issuance we were going to get, who the Treasury Secretary was going to be, et cetera. Yields were kind of at the highs of the year in January, and we continued to just see yields go from 4.8, call it, to a low of below 4%, but towards the end of the year, and that bid to bonds, that the yields coming lower, really was ultimately what was the tailwind for, I think, the third major theme in the futures, which is there's just the resiliency of the equity market, which caught everyone by surprise. I mean, everyone was really worried. Obviously, Q1, horrible Q1. Bottom kind of Liberation Day, early Q2. So the bounce from just the taco trade, or whatever you want to call it, in early Q2 probably made some sense given the magnitude of the sell-off, but just the resiliency throughout Q2, throughout the summer, into Q3, across the equity indices, I think that was something where you just had to tip your cap and just really appreciate how we had in the U.S. a pretty strong year, in spite of everything going on. If you were just to look at social media, you would not have thought that we had really sharply positive year. But that said, I mean, if the one thing I would say within the equity markets, and maybe we'll touch on it because it's continuing into 2026, is if you look at if you look at it, in spite of the strength in the U.S. markets, the U.S. lagged up markets outside the U.S., Europe, Asia, et cetera, massively. And so it was a year that, even though with the strength of the U.S., it was a meaningful underperformer when you're looking at it on a common currency basis. And so that was another thing to note within the equity market.
Yeah, if you have to look back at last year and say, one theme, one asset class that really just leaps off the page, it has to be the metals. Yeah. I'm hard pressed to think of another year where we really had such metals dominance. And it started off the year, gold started off pretty strong. As you mentioned, silver kind of was a laggard. If you go back to even the middle of last year, a lot of silver bulls were not happy. They were like, why is gold making new all-time highs every day? And silver was selling off for a while there at the first half of the year. So it was a wild year, but then silver obviously caught up with reckless abandon. It's one of the few years we can look back in last year and say, oh yeah, metals, that was the story of the year. Obviously equities did all right. Crypto started coming on, then they faded by the end of the year, but metals kind of started off with a bang and really kept rolling. So if you were one of the many gold bugs and now newly minted silver bugs in the audience, then congrats to you. It was quite the year for the shiny stuff. But let's fast forward to this year, indeed this week. Mr. Rich, I have some thoughts. I have some movers and shakers I want to break down. But before I do that, what is catching your eye in the world of futures this week and indeed to start the new year, sir?
I think it's to me, it's, you got to think about the metals, right? And it's not the metals as it's kind of spills through into things like copper, et cetera. And what you're seeing, I mean, a lot of that move now you're seeing in silver is in the spot market, of course, but I think, it's just to me, it's all the commodities. It's oil. I mean, everyone, after the headlines we got on January 3rd, everyone was like, sell oil. We're going to just dump a bunch of oil, drill, baby, drill with a new country, et cetera. And just the positive price action in oil. And I mean, we even had bearish inventory numbers today and oil ticks higher. Now, of course, there's some stuff going on in the Middle East, but even before that Iran headlines came in, to me, the strength of oil in the face of it didn't go lower on all this bearish news. And when prices don't go lower on bearish news, I think you just got to ask Jesse Livermore how that works out. That's usually a pretty good sign. And there's a lot of traders that are short in the oil market. So that's probably why you've been seeing some upside call buying in the oil market too.
Well, there's no shortage of upside to be found in the futures market on the second full trading week of the new year. What do you think our top 5 are, though? Listen, I'll give you a couple of seconds to mull it over. Hints. Rich just broke down a couple of them. Let's kick things off. Man, Rich, this looks like a 1 month or even 1 quarter chart. I mean, it cost you 10.5% to break into our 1 week movers. That's how wild of a week this is. This is just crazy. 10% in a week, and that's just number 5. That gets you to our old pal WTI, as Rich just kind of broke down. A lot of people were underwhelmed with the crude oil action after Venezuela. They thought, okay, there'd be an immediate impact. It was kind of muted as people discovered, oh, wait a minute. There needs to be a lot of investment, a lot of work behind the scenes to really untap and get the spigots flowing over there in Venezuela. But now we're starting to see some delayed impact. Of course, what's going on in the Middle East, also a big driver of that. So whenever there's a dust up, a flare up in the Middle East, that tends to impact crude. And that's what we're seeing right now, up 10.5%. That's WTI. If you like the more international flavor of crude, AKA Brent, up a little bit more, about 10.7% on the week. Number 3, we go out to heating oil, up 10.8% on the week. And then we jump again. Just wild stuff. We were just talking about silver having a good year last year. This move this week would be a good year in silver almost any other year that you traded it. If you were up 19.2% in silver on the year, Rich, I think most silver bulls would be really happy with that. Instead, that is the number we are seeing for 1 week. We have a big silver bull on our option block show. He's been long silver as long as I've known him, and he sold it at the end of last year, and he is lamenting that right now. I mean, it's hard to blame him. It was the right move to sell it at the time, but 19%? I mean, what, is silver a meme stock now? Apparently it is, Rich. Maybe it's a crypto, but either way, it is just ridiculous. And then on top of that, lithium. You have to take lithium with a bit of a grain of salt. Not exactly as liquid as a silver, but still up over 19%, taking the number 1 spot with about a 19.4%. So this is about as wild of an upside start to the year as I can recall, Mr. Rich, in terms of broad-based commodities all come into play. You've got energy, you've got the metals, and just for fun, we've got lithium. popping off this week, Mr. Rich? Obviously a wild smorgasbord of choice. What's catching your eye this week, sir?
Yeah, I'm with you on silver. I've been long time bull on the precious metals, and was long silver, but I was out as well. In fact, I wrote a note. I think it was in December around the holidays called "Silver Bells," saying that we're ringing the bell on the top of silver when CME was raising margins and things like that. But what we realize is that uh, while that's taken out, this isn't speculation that's going on right now, at least not in the futures market, because the spot market in China in particular, which is driving this year, is still trading at an almost 20% premium to the futures market. It's accumulation of spot that's driving it. And I think when you look at that, the again when lithium, you could throw that in there as well, but then you look at the crude, it's very much a geopolitical story, and maybe that's why we've got price insensitive buyers out there. And I think that's something where, yeah, I mean, you're right that 2 weeks into their, for a week, if you will, 10.5% for is just crazy to think about that. But maybe when you start to think about the fact that people driving these prices are price insensitive, it's given us a sign that we want to be a little bit more patient, and work those trailing stop losses instead of taking profit too early, because maybe things are going to have a little bit more legs than we think on some of these moves this year.
I love that. That might be the most academic thing you've ever said on the network, sir. Price insensitive buyers. Code word for they're crazy. They don't care what level they're buying out there, list. But this reminds me of just early days of the meme stock pop. So mid 2021, after that first wave had kind of petered out and people were looking for the next wave. As you'll recall, Mr. Rich, there was a lot of talk about silver being in that next wave of short squeezes to the upside. And a lot of people said, well, silver, a broad-based commodity traded globally, a little bit of a different thing than a YOLO GameStop or something. It might be a little bit more challenging to squeeze. But as you point out, Mr. Rich, maybe some of these price-insensitive buyers don't seem to care about that, Mr. Rich. And maybe we are living through a wild silver short squeeze. What do you think, sir?
I think honestly, I don't know who can afford to be left short, frankly. But we know it. We know it's the case. You can see it. You can see it out there in the data. But that better be guerrilla warfare where you're kind of in and out pretty quickly. Because I'm just saying that to me, again, I kind of like the supply demand characteristics where I'd love to be getting back in on the long side, but the market just won't let me. And I think maybe for some people they just are going to get back in. Again, regardless of price, I'm trying to be a little bit more disciplined, but it's a market that's just not letting even the bulls get back in, and so I can't imagine being short that right now.
Speaking of getting short silver, our chat is saying SLV has some meaty puts to sell. They're saying they never recall seeing implied vol on silver above 100. Well, you're moving 20% in a week, so that is going to do that. I don't know. You got to have some cojones right now, Mr. Rich, to step in front of that. What do you think about harvesting some of that juice in SLV downside puts right now, sir?
Well, if I were going to sell any silver options at 100 implied vol, it would definitely be downside, because like I said, I wouldn't mind getting back into the trade. So to me, if you got a strong view, the ultimate way, FOMO trade for me is to harvest some volatility to the downside. So that is definitely one way to look at it. But I wonder to what extent your broker is going to let you do too many of those.
Yeah, 100 vol in silver. That's just where we are now. Listen, I told you, I said at the end of last year, I said, watch out. January comes in like a lion these days, and all sorts of wild stuff pops off in the first few weeks of January. And so far, 2026, unfortunately or fortunately, depending on your perspective, is not disappointing. All right, to the downside we go. Yes, things are selling off in this market, including broad equities right now as we are coming into the start of the show. But what's lighting it up to the downside this week? It's not quite as sizable to the downside. I think the upside is just kind of skewing our perspective. Normally, we'd see nearly 6% to break into the downside in a week would be pretty respectable. That gets us to corn. I haven't talked a lot of ags on the show lately, but number 5 to the downside this week is corn. Listeners off almost 6%, about 5.75%. Number 4, keeping it in the ags, it is oats off 7.15%. Number 3, out to energy we go. It's nat gas, off about 7.8%. Number 2, it was a terrible year last year for this product. It was our number 1 loser of the year, which a lot of you got wrong on our flash poll. You picked ETH. ETH had not a great year, but it wasn't the number 1 loser. It was this one. It was OJ. And so far, it's having a rough start to 2026 as well. Just when you thought OJ couldn't get any cheaper, I guess a good thing for your breakfast table out there. Everything else is getting more expensive. Your coffee sure as hell is more expensive. But you know what? The OJ off another 10.1% this week. So I guess that offsets some of it. And then we've said this for a while. If you need a hot beverage switch, then maybe cocoa is the way to go. It certainly is a heck of a lot cheaper again this week, off nearly 14%. So if you could do with a little bit less caffeine, a lot more sugar, it's still a hot beverage at the end of the day. So if you need to swap 1 for 1, how about there you go? You can probably buy your OJ and your cocoa, and it'll still be cheaper than 1 cup of coffee these days, Mr. Rich. So wild stuff to the downside as well, Mr. Rich. Anything catching your eye this week, sir?
Well, I mean, as you highlighted, the ags are what's catching my eye. WASDE reports out yesterday. I think even though it was a horrible year for farmers last year, the WASDE report, in January just showed us the ending stocks were higher, yields were higher. It was just bad news, right? It was bad news because they had such a bumper crop. I think the corn crop ended up being like the largest in the history of the United States. It was that big. So that you feel bad for farmers because that one's gonna leave a mark. It's interesting to me when you look, the old adage in futures and commodities is the cure for high prices is high prices. And I think you look at like cocoa, like you're talking about, 2024 and then early 2025, cocoa prices were going through the roof because of all the problems we're having in West Africa, the climate issues, supply chain disruptions. But the prices are, just got cratered last year, and we continue to get cratered this year. So it's just demand destruction from high prices. And so maybe it is time to dip back into the hot chocolate. But I'll tell you, cocoa, even at this level, is double, more than double what it was a couple years ago. So be careful bottom fishing too much on that one. And I think OJ's in a little bit of a similar boat. But to me, I think this year, an election year in the U.S., so it's all going to be about affordability. And so I think consumers are going to be focused on how much their food costs and how much their gasoline costs. And so right now, I think you've got a little bit of a mixed bag as you're seeing oil bottom and move higher. Gasoline's going to follow, but you're at least seeing some relief in some of these other food products, on, like you said, on the breakfast table. So that's definitely a place to keep an eye on for the consumer.
So far, your breakfast is cheaper. That's probably the only meal of the day that's cheaper. You eat Brinner. There you go. Then you're good, listeners. You have breakfast, you have Brinner, and you're managing to survive the affordability crisis. Let's keep sliding on out, see what's lighting up the tape out there today. And yet another wild day. The equities are selling off. We're seeing, like I said, wild action in the metals and in energy. Is all this translating into a wild day on the futures front? And the answer is yes. We've used this barometer for a while now of 300,000 contracts. That's kind of the threshold for activity. You get above that, it's a pretty active day, and we are clearly above that right now. 330,000 contracts as we kicked off the show. Obviously, probably more than that right now to break into the number 10 spot today. That gets us to our old pal 3 months over. In fact, let's expand it a little bit. Let's go out to number 12. Let's even start at number 15 just for fun. Because number 15 is a product that a lot of people are probably curious about right now. Where does this stack up? Number 15 is silver. So silver not quite in the top 10 most actives today, listeners. But you know what? If we come back in an hour or two, that might change. There's a lot of action right now in silver, and those futures are slowly climbing the list. I can't recall the last time we saw silver this high on the list, so it's a pretty active day. If you're wondering where the other big precious metal is coming in today, that's coming in at number 12. It's gold. So the big brother is still dominating the tape out there on the metals front, but we'll see. If silver keeps this up, it might just kick gold to the curb. Let's just do number 12 on. Why not? Number 11, another product we were just talking about. It's our old pal WTI. By the way, our list is dominated by all March with the exception of gold, which is the Feb contract. And number 10, 3-month SOFR, which is the DEES contract. Everything else is all March all the time, including number 11. It's crude oil WTI, 300,000 contracts exactly. So that's actually normally our barometer for number 10 coming in at number 11 today. Number 10 is, of course, as I just said, 3-month SOFR, the DEES contract, 331,000 contracts. Number 9 is the 30-year, 396,000 contracts. Number 8, keeping it in the rates. It's the 10-year, 469,000 contracts. Number 7, it's the 2-year, 472,000 contracts. I promise there will be more than just rates here, listeners. Number 6, speak of the devil, it's the NASDAQ E-mini, 515,000 contracts. So at number 6, we're already north of 500,000 contracts. Number 5, jumping up again, a big jump between number 6 and number 5. Back to the rates, it's the 5-year note, 889,000 contracts to number 5. Number 4, to the S&P we go. A little bit of red on the screen. Is that translating to some volume? The answer is yes. The S&P Micro coming in number 4, 1.15 million contracts. Number 3, right above it, the big brother, the big boy in the equity complex, the S&P E-mini, 1.26 million contracts. Then number 2, what is normally number 1 on most days, it's the 10-year, 1.45 million. That means you know what's kicking it to the curb. The only thing that can really challenge the 10-year on any given day, it's the NASDAQ Micro. Of course, it's a micro, so take that volume with a grain of salt, but still, it's a heck of a lot of paper. The NASDAQ Micro, 1.82 million contracts right now. So, Mr. Rich, we've got quite the representative sampling on our most actives today. We got silver threatening to break into the top 10. Gold right there as well. Crude oil coming in right outside it at number 11. And then the equities and the rates tearing it up today, sir. What is catching your eye in today's activity?
Yeah, I mean, I said the metals are going to continue to be a story, so I wouldn't be surprised to see those volumes keep creeping higher and higher. Oil, probably people still can't believe what's happening, but to me, the two things that jump out to me when I look at that list. I mean, rates are always going to be up there from a volume standpoint, but the story in rates is changing. The story in rates was Fed easing last year. Now I think as we go into the first quarter of this year, and even beyond, we're talking about the Fed being on pause and then potentially, and well, not potentially, but definitely a new Fed chair. And of course, we had some questions on Fed independence, et cetera. So I can certainly see where there's some demand for hedging. And then the other thing I've been kind of focused on too is just some weakness that we see in 10-year because of the potential inflationary impacts from some of these commodity prices. Now you need to see it be a little bit more widespread as there were some pretty big movers to the downside this week. So it's not completely widespread yet, but that's something to think about. Within equities, NASDAQ being up there, not a surprise, but the overall broad market is only up small. If you look at the beneath the surface, if you look at the kind of like what's going on underneath the headline index, it's been a pretty massive shift this year on a year-to-date basis. Looking within the S&P, while it's up small, technology is down on a year, right? Technology, the sector overall within the S&P, which is pretty shocking. Whereas energy, materials, industrials, like those really commodity-centric cyclical industries are up massively up from the index. So you're seeing a pretty big rotation within a relatively flat market. So I think to me that's the interesting thing within equities is not just the headline futures volume, but the story of what might be driving that. That there's clearly people coming into the year overweight technology because they generally have been, but we're seeing some rotation within the equity market, which I think is something worth noting. And so the combination of metals prices, energy prices moving higher, and the cyclical components of the stock market moving higher is something I think listeners probably want to keep an eye on.
Speaking of things they want to keep an eye on, we have some listener polls and everything else I want to get to. I want to get your prognostication for the year as well. But before we do that, we covered a lot of ground in the world of futures already. We talked equities, we talked metals, we talked, of course, energy. Anything else, any other products we didn't really have a chance to get to that you want to talk about on the show this week, sir?
There's really, we talked about a lot of them. I mean, you mentioned crypto before. It is interesting to see all these stories, all these big moves, and crypto not being part of it. So it is a little bit surprising. But, we had a really bad Q4 in crypto and Bitcoin and ETH. You were starting to see You're starting to see a bottoming process going on there. I think Bitcoin is probably got a little bit more of a resistance and a supply above us here, but ETH I think is the one that's really starting to act a little bit better, moving back above the moving averages. That's the one where I think, to me, you're seeing some pretty massive usage of stable coins. And while the central banks outside the U.S. are accumulating gold to try to replace the dollar, I think you're seeing the U.S. really promote stable coins, and I think ETH with a 70% market share is going to be a big part of that. So I think, to me, ETH is definitely still one that might be worth taking a look at getting back in on the long side if you're not there.
Interesting. Some bullish optimism for ETH. ETH has definitely suffered some slings and arrows of late and kind of finished the year with a whimper. I said the theme of last year was definitely precious metals, but I think for me, the product that had the wildest story of the year last year was definitely ETH. It sold off in Q1, had that spectacular rally in Q2 into Q3. It went from literally the bottom of our list, the biggest loser of the year, Rich, all the way up to the biggest winner. And then it settled out somewhere in the middle there towards the lower end of our losers towards the end of the year. So absolutely wild calendar year for ETH. Can ETH do it again? I guess we'll find out, listeners. Speaking of finding out what you folks think, it is time for a little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, everybody, welcome to the Futures Free-for-All, the portion of the show where you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. Before I get there really quickly, Mr. Rich, our chat is all fired up about, we were talking about silver earlier. They're saying that it seems like silver is just hell-bent on getting to 100. What do you think? Silver at 100? That would have seemed absurd if you asked me that even 6 months ago. These days, Mr. Rich, we could be there next week.
Based on what we're seeing in the spot market, I think we could definitely be there before the end of the month. I'm not calling it again. I'm on the sidelines, just so you know, but I think the structural supply demand is still, it's a market in short supply. And I think where you're seeing the demand in the spot market trading at such a huge premium, I would suggest in the near term that backwardation is going to lead to higher prices for sure.
All right, let's see what you folks had on the brain last week. Last week, we asked you folks, again, on this show, a little bit of a fun flash poll with our buddy, Mr. Dan the Man Grams, of the other winner, the other entrant into the Crystal Ball Hall of Fame. Wild to have two of them back-to-back on the show. We asked you during the show last week, which asset do you think was the biggest loser for the year? It was, of course, OJ. But nearly 70% of you picked ETH. I get it. I get why you went there. ETH was just a dumpster fire in the last portion of the year. I could see why the sentiment had just turned so negative. I could see why it maybe felt that way, even if that wasn't actually the case. We had about 7 to 8% each for Coco and OJ. OJ, of course, being the right answer, and about 15.5% of you choosing the VIX. So again, ETH, sometimes it feels a lot worse than it actually is. And then we also asked you last week, it was, of course, the first full trading week of the new year. We said time for some New Year's trading and markets resolutions. Quite simply, which of these are you planning as a New Year's resolution, or maybe you have write-ins of your own? We said, are you planning to reduce some positions in AI? As Rich pointed out, that is clearly happening. We have explore global markets or trade new option strategies, or the infamous other. We had a lot of interesting write-ins for other. I won't have a chance to get into all of them here, but other coming in at 12.5%. Then we had a tie for number 2 between reducing positions in AI, which again is clearly going on, as well as about 25% for exploring global markets, dipping your toes maybe into a little bit of Kospi, or we were joking on our European market brief that financials in Europe had a hell of a year last year, 75%, no AI required. So there are some other interesting areas to explore. And then the number one for our audience, 37.5% of you said you want to trade some new option strategy. So that is always interesting. And you had some suggestions for what those strategies might be. So interesting to see a lot of you looking to add to your toolkit, add to your options arsenal in 2026, which is always a good thing. But I have delayed long enough, Rich. I have bought you all the time that I could buy you, sir. The moment is at hand. Our poll went live at the beginning of this week. We are kicking off another year with another contest. By the way, our listeners won an awesome grand prize, a full year of the Pro, $600 value for each of them. So we gave out $1,200 worth of prizes to the list because we like you folks out there. You want to join that party, get your name in the hat, get over there to @options on Twitter. That is where the official poll resides. We also are accepting them via questions at theoptionsinsider.com. I know some of you are a little shy about making your VIX guess open to the world. So if that's you, hit us up on the email side and we will count you as well. Get it in this week. We have a poll live as well, listeners, which is choose your closing level for VIX. Again, this is the VIX cash. End of the year, we gave you 4 choices, under 15, between 15 and 18, between 18 and 21, and over 21. Mr. Rich, which way do you think our audience is going? And then more importantly, our folks want to hear from the newest member of the Crystal Ball Hall of Fame. What are you feeling for VIX closing level at the end of 2026?
Oh, good questions. I think your audience is. My sense is when we look at big groups, there's a recency bias, and so I'm going to guess the audience is probably going to be leaning in that 15 to 18 range, given where we are and kind of given where we've been in the last month or so. That would be my guess. Where am I leaning? Well, last year, 1492, Christopher Columbus, brought me some fame and fortune. So I was leaning, and I'm watching Turn on Netflix. If you haven't seen that, good show. So I was leaning towards 1776.
That's the revolutionary show, isn't it? Is it not? Yeah, exactly. Yeah, I remember that one. Yes.
But I think what I'm going to do instead is pick another famous year in U.S. history. The year I was born, 1968, is what I'm going to go with, because 1968 is also the year that was the start of a major commodity super cycle, and I think we might be seeing the beginnings of a commodity super cycle. So I'm going to go with 1968. 19.68 is at the end of the year 26 level for the VIX, closer to its 30-year mean, if you will.
So going from Columbus to 1968, are you down for that, listeners? Rich, certainly have your finger on the pulse of our audience. They are feeling a little recency bias. 45.5% right now, saying it's going to close between 15 and roughly 18. 22.7%, actually a tie for each. 22.7% each, an exact tie, which is kind of wild, between under 15 and over 21, Rich. So 22.7% each are going for the wings. They say we're going to have a real boring end of the year or a nice, interesting, spicy one. And only 9.1% going for the 18 to 21 range. Get in there now. Make your voice heard. And of course, enter your name in the hat. You too can win a pretty damn good prize if you do ask me. And of course, you'll be ensconced, enshrined in the Crystal Ball Hall of Fame forever alongside Mr. Rich and Dan the Man Gramza. Well, Mr. Rich, you made it through the first show for you of the new year. Congrats again on your eerily precise Columbus prognostication for the VIX Crystal Ball. Your red VIX jacket will be in the mail post-haste once we get your jacket size, sir. And before we go, if folks are intrigued, they want to check out all of your various options musings, or maybe they want to learn what's cooking over there at the Hogwarts for derivatives traders, where should they go? What should they do?
Well, anyone can feel free to connect with me on LinkedIn. They can also follow me on X at Excell Richard. And then, if you care about hearing any more of my long form ramblings, my Substack is called Stay Vigilant. So Stay Vigilant on Substack is for more kind of long form macro ramblings about the markets.
Ooh, that'd be a good name for it too. Long form macro ramblings. There we go. And people want to know, Mr. Rich, when you join the Hogwarts for derivatives traders, how does the wand selection work? What is the equivalent of the wand selection over there, sir?
The equivalent is it's the trading strategy selection.
Oh.
You find out if people like to be trade from the long side or the short side on the options, and then we find out what their favorite strategies are.
I thought it might be you get to choose your own graphing calculator or something like the graphing calculator chooses you.
No, you got to do the math in your head. I'm old school. On the floor, you had to do it in your head.
That's true. We just had sheets in our brains. There we go. Listeners, you too can play along. Follow along with Rich on the Substack, and maybe you're intrigued. You want to go choose a wand over there at Hogwarts for yourselves. Interesting stuff. And of course, while you're checking stuff out, check out our friends over there at Tasty Trade, tastytrade.com/podcast. The place to go to kick the tires and light the fires. That's going to do it for us on the Futures Rundown. Not going to do it today, though. We'll be back at the end of the day after the closing bell to break down what's looking like it's a pretty active day out there. So should be some interesting stuff. What's going to make it into the top 10? Well, you got to tune in to Thor, a.k.a. the Hot Options Report, to find out. Then we're back with our usual array of content, including back with the Flow Master tomorrow, Dr. Vicks on Friday, and then, of course, back again next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.